How can the Fed be cutting rates again with inflation running so high? The Fed will cut in October even with high inflation? What history tells us? The Federal Reserve is poised to cut rates in October, and yet inflation is still running hot. So how can that be? Even if this cut is not an end but a signal that something big is about to go down. Here is the fact. In September 2025, US inflation rose about 3% year over year, still well above the Fed 2% target. The Fed officials are talking about rate cuts due to a slowing job market and rising downside risks. This is a paradox. Typically, you cut rates when inflation is low, not when it remains high. But look back at the late 1990s. During dot-com bubble phase, the Fed had cut rates after the crisis of long-term capital management in 1998 to stabilize the market. Liquidity was abundant, rates were low, and the tech rally exploded. So the factors are weak labor market, elevated uncertainty, risk of slowdown. The Fed is shifting its mandate from strictly inflation to balancing growth and jobs. When job data weakens enough, they'll be preemptively easy. And what's the outcome? If rates comes down while inflation remains sticky, you get excess liquidity, speculative flows, and blow-off top in risk assets. So here is the twist. This rate cut in October might be not the end of the cycle, but the trigger for the final phase of the bull market. If liquidity floats back in, if rates go down while inflation doesn't fully cool, we could be closer to a blow-off top than we think. If you want to stay ahead, watch for jobs uncertainty, if unemployment rises, inflation trends, if it stops rising but doesn't drop, the Fed language. If they shift from inflation first to job first, stay sharp, stay ready, because when the real rally hits, you will want to be positioned, not reacting. Pay close attention, like and follow for more deep dives into crypto stocks and macroeconomics that nobody else is covering. My name is George from Finance Hub Show. Not financial advice, only entertainment purposes. Share, follow. I'll see you on the next one. Bye bye.